All right, everyone. Welcome back to Pickers Market. We have our first special guest that's not internal. It's a big get, everyone.
It's a big get.
It's a big get. Friend of the company. We got a little new partnership we're going to talk about here.
We do.
It's Brian Belski. Brian, welcome to the house.
Wow, thank you so much, Keith. It's amazing to be here. I'm actually very surprised on how cool this is, man.
Isn't it? It's a great
This is
studio,
cool.
and we
It's a
got
great
Tyler,
studio.
Lisa. So we're gonna before we normally get into this small cap discussion we're gonna have because you are the man of small cap
Thank you. Yeah.
and mid cap. I shouldn't say just small
Thank
cap,
you.
SMID cap. We're gonna have Lisa. She's got some questions for us, and I'll let you kind of start it out. Go ahead, Lisa.
Yeah. So we traditionally started off the podcast to gain a little bit more traction with two truths and a lie. So
Two truths and a lie.
two truths and a lie. So I will tell you three
We're gonna
statements.
put you a little pressure.
But
here.
now
Real
it's a
quiz. You didn't know.
tradition, and we thought once we have like such a special guest, why should we change our
Yeah.
tradition? So we still do it, and we put you on the spot.
Okay.
So two truths and a lie, and it's a small cap edition.
Okay.
So I will tell you three statements, and you will let me know where I lied. And I'm pretty sneaky, so.
Okay.
Tyler and I
that's
haven't seen
it
these
about
questions
it.
either.
Okay.
Just so you know.
Okay.
Okay, A. During the dot-com bubble in the period between 2000 and 2002, small cap stocks outperformed large caps. B. Over the last 50 years, January has been a relatively good month for small caps compared to large caps. So better for small caps than large caps in January. And since 1970, about 5% of small caps grew into large cap stocks.
Wow.
Where did I lie?
There's some interesting questions. I have no clue on this. I'm glad you're going first with this one.
So the last one was 5%.
Yes,
That's
since
the lie.
19.
That's the lie.
That's a lie?
Uh-huh.
Okay.
Wow. Tyler, you want to go next?
That was so confident. I don't know if I want to go against it.
Exactly.
I'm a little interested in the small caps outperform large caps
During the dot-com
during
bubble.
the dot-com bubble.
Mhm.
So I'm going to go with that.
Double
one. That-
digit.
That's the lie.
That's the lie.
yeah.
Yeah,
A.
I mean, large caps are down. Like what? Tech was down.
I know,
80%,
but if you think about all the-
small cap, yeah, that's a good.
If you
What was the
think
B?
about all the
What was
small-
B's question? Or the
B was over the last 50 years, January has been better for small caps than large caps.
well, that one I think should be true. So I'm going to say that one's false. So we all have a different pick here, Lisa.
like that.
That's how the game's played.
Well,
What do we
I'm
got?
very glad I didn't trick Mr. Belski on this.
Oh,
He is.
Brian,
Good
you
job.
are the man. Nice job.
Yep.
No
yep.
surprise.
Well, that
there.
reading kind of paid off.
This proves he is a SMID cap expert.
I mean, that's perfect. And it is not even staged, so that makes it even better.
it's live.
Perfect. So I kind of chime right in after this little fun endeavor. Brian, you had like a substantial career change over
Yeah.
the last month.
Yep.
So can you briefly explain what changed in your career life? And I mean, it opened up a great opportunity for us to partner with you more closely and brought us to sit down with you today. So can you briefly explain what happened?
Sure. After working for quote unquote the man for 36 years, I decided to become the man and work for myself. And it's equal parts overwhelming and excruciating. But but it's been amazing. And so on October 29th of 2025, we launched our firm, and our firm is called Humulus Investment Strategies. His is our moniker, capital H, small I, capital S. And humulus is Latin for humble. And so some people that don't know me and just see my public persona or my shtick are like, yeah, you're not humble. I'm like, what are you, nuts? Everything in my life has been driven to be humble. And in investing, you have to have humility and be able to admit when you're wrong. And I'm not the smartest person in this room. I mean, and one of the things that I learned early on is never think you're the smartest person in the room. But people always ask me, like, why the name? Why the name? And December of 2000, I was the fundamental market strategist at Piper Jaffray. They wouldn't give me the chief strategist title because they had a really long tenured technical strategist there that would not allow me to be the chief strategist. Anyway.
It still pains you, I see.
No. I mean, I'm just, it is what it is. And so I was underweight technology as a strategist at Piper Jaffray, as it was known at the time, which was a growth investment bank.
That's a bold statement.
Not popular. How to Make Friends and Influence People by Brian Belski. It wasn't really a great thing for my career, but I ended up, at the end of the day, I got to do what's right for by analysis and for my clients. So anyway, it caught the attention of the television show by the name of Louis Rukeyser, Wall Street Week. And for those who probably look it up on the Google machine on who Louis Rukeyser was, he was a big deal. And so you flew to Baltimore and then drove to Owings Mills, Maryland, taped the show on a Friday night. Man, I was scared. I was pacing back and forth behind the curtain. And I'm like, God, just bring me something. And then a scripture came to mind, which is Micah 6:8, one of the last books of the Old Testament. And I'll paraphrase, God asks you to do a lot of things, but you absolutely positively must act justly, love mercy, and walk humbly. To this day, I was quoting the scripture in my head before this started, before I go on anywhere live on tape or do a talk. Why? Because it keeps you grounded and humble. And I think so many people that I've encountered in my career, oh my gosh, there's a lot of ways you can take this, but they have to be the smartest person in the room. There's so much, and all the fancy schools and the pedigrees and all the kind of, I'm a kid I was born in Minneapolis, grew up in Wilmer, went to St. Cloud State University. I'm a simple kid, worked hard, rolled up my sleeves, worked for amazing brokerage firms in my career, lost my job 3 times. So that's the humbling part of it. Bad stuff, good stuff. It's life, right? And so we've incorporated all of that into how we think about investing, and that's why Humulus Investment Strategies.
That's awesome. So now we are partnering with you, right? You will be our manager for our SMID Cap portfolio. So since that's going to be the case, we've heard over the years, small cap, mid cap, this is time to shine. Why now?
There's someone that has been talking to me about wanting this particular organization to have my SMID cap portfolio available. And unfortunately, I worked for the man during that time, much of that time frame. The SMID cap portfolio, we've been running it as a real live portfolio for several years now. And so we're very blessed and fortunate that we're running it on our own and we can afford that to you. So why now? This latest stage in the cyclical bull, the latest stage in the secular bull market, let me just kind of go back. We made a call back in 2009, 2010 that we believed that U.S. stocks were entering a 20 to 25-year secular bull market. In secular bull markets, you can have cyclical bulls, cyclical bears. We're in the midst of the latest cyclical bull market that started in October of 2022. So if you think about 23, 24, and 25, those 3 years, the first 3 years of this new cyclical bull market have been all about momentum, multiple expansion, okay? So what our work says on the stock market historically is that we think that we're entering into an earnings-driven market, a much more fundamentally driven market where we see the broadening out of performance. And everyone's talking about broadening out of performance, but they're not really explaining it. So what does that mean? We still think that the big cap stocks can do well, but we think the performance is going to be shared by other areas, value, dividend growth, and something that everyone's forgotten about, small mid cap. So why have they forgotten about it? Well, first off, there's been such an intense focus on large cap, number one. But why now? Because from a fundamental perspective, if you take a look at what we do from a top-down basis, we have valuation models, operating performance models, earnings growth models, and technical models on all the markets. But we look at, in combination for the small mid-cap market, oh my gosh, they look amazing. And especially from the fundamental perspective, when you're taking a look at price to free cash flow, in price to earnings, in earnings growth, but nobody believes it. Why does nobody believe it? Because they haven't been performing and da-da-da-da-da. We have to chase all this kind of stuff. And I think it's time. It's time. That was the voice of consensus, by the way.
I love that voice.
You like that? And so that's why you always want to go where the puck is going. Ultimately, you want to skate where the puck is ultimately going. I've learned in my first 6 months in the business, I was very blessed. I met Warren Buffett, and he always stuck that to me, like, Brian, never buy anything unless you can reach out and touch it. And that's why we've been negative on some things, but really positive and more fundamental on things. You got to be early. And so we really think now's the time for normalization in the markets, more areas aside from just large cap working, not at the cost of large cap, but just spreading out performance. And let's face it, man, we have the best country in the world. We got the best companies in the world. And so that's why I still think US. Now we're going to start to see a broadening out overall.
So when you talk about the broadening out, and you're specifically talking about small caps and mid caps, two-part question for you. First is, what is your break point for small cap versus mid cap? And then where would you lean more heavily given your thought on the broadening out? Would you lean heavier into small value, small growth, mid core, mid growth? Like, where are you seeing the most opportunity right now?
It's a great question. So we try not to buy companies below $500 million because of market cap, because of liquidity. And then we kind of cut it off at 30, 40 billion on the mid cap side. Back in the old days, it was 10 billion was a mid cap company. I mean, and so everything's kind of grown. So right now we're leaning more toward mid cap because that's where kind of where we think the most consistency has been. But from a fundamental perspective, the most attractive stuff is small cap. So the greatest thing about the benchmark is the S&P 1000, which is the S&P 600 small cap and the S&P 400 mid cap. Those two together, actually, some people have it wrong on the Russell 2000 when they talk about Russell 2000 doesn't make any money, or all these companies that have no earnings. Well, you're thinking about it from an index perspective, and you're not looking at the stocks. Last time I checked, the stock market is a market of stocks. I think so many people. I'm just a simple kid from Wilmer.
Good point.
Yes. Yeah.
I think in this business we focus too much on the index. I'm going to make the index call. Well, so it's time to now buy stocks. If you talk about the stock pickers market,
There we go.
the stock pickers market. When I used to be in the institutional business, as of last October, I'd go into these hotshot smart guy offices at J.P. Morgan or Fidelity, and I talk to some of these investment managers, and I talk about stock pickers market. They're like, these are the same people that own 200, 250 stocks in one portfolio. And, oh, by the way, I don't know what to buy, so I'm just going to buy the spiders because I'm scared and inside the portfolio. And discipline, that to me is not investing. So from my perspective, in growing up on the sell side in Minnesota at places like Dane Bosworth in the 90s and then Piper Jaffray, we were small mid-cap growth. And so to answer your question, I think if I'm telling you from a market perspective that we have valuations that are really attractive than the overall relative to the large cap market, cheaper than the large cap market, but growing more than the market, that's a growth at a reasonable price type thing. And I've made my career on growth at a reasonable price. Even though, I in my large cap market, I've talked about NVIDIA and Palantir. Those are two stocks, right? Yeah. We bought Google. We doubled down on our Google investment last year in our large cap money because of the stupidity of people selling it because of OpenAI. And now you've seen, well, that's worked this week. So you have to kind of feed on the emotions of the market during times like that. But where the emotions of the market now are like, now small cap, why now? Why small cap now? I mean, because it's going to work. Yeah. And it's going to work because the fundamentals are all teed up where they weren't necessarily there 2-3 years ago.
100% agree.
Are there any specific sectors within the small cap, mid cap space that you like specifically now?
So we think more longer term relative to large cap money. So large cap money, we're 12 to 18 months, and small mid cap, 18 to 24 months. So we love the communication services sector and small mid cap because it's a smaller sector relative to the large cap. So you can have tracking error and have bigger positions. So communication services, financials. Oh, I love small cap financials. I just love them. Part of it is that everybody hates them, and they just don't, because they don't understand them.
I feel like you've liked financials for a while now.
Yeah, so there's a certain person on CNBC that teases me, and then I was financials. But it's a totally different game. Like large cap is about scale, right? Yeah. Small cap's about relationships, and I think that's going to continue to garner. And we do like parts of utilities in small cap because we think actually utilities is the backdoor way to play AI that not a lot of people are talking about. Recently, so many people are talking about materials and energy because you got to power AI. Well, utilities. If you think about energy and materials, if you think inflation is going to go down, and you think commodity prices are going to go down over the next 12 months, which we think they're going to, aside from the silliness in gold, that when commodity prices go down, those two sectors underperform. We can be all smart ourselves, be the smartest person in the room, and try to buy energy stocks because they're going to fuel AI. But what's going to fuel AI? That plug right over there. Yeah. That's what's going to fuel AI because I'm plugging into the wall, man. Mm-hmm. And so that's the way to play it. Oh, by the way, a lot of utility companies are powered by natural gas. So, I mean, it just kind of makes sense that way for us.
You want to talk about your team a little bit? Obviously, being small cap manager, a guru like yourself, it's hard to do. I mean, I've been doing this close to the same time as you. It's that small cap land. There's thousands of stocks and opportunities and landmines. You want to talk a little bit about your expertise and your team as well?
Yeah. So at BMO, we had 4 people running $12.5 billion. 10 different mandates, 15 different products. At Humulus, we have 4 people, soon to be 5.
Nice.
And I only have 1 job, where at BMO I had 3 jobs. So I'm excited about that because I can do even more on the stock side. And that's where I grew up in the industry. The very first stock I ever analyzed, by the way. I started my first real job on Wall Street was at William O'Neill and Company. And so Bill O'Neill found out I was from Minnesota. He goes, "Come here." So he walks over and he says, for those of you that don't know what I'm about to explain, there's this thing called a filing cabinet. So we go in the filing cabinet and he pulls out a file and he throws it at me, and it was Minnesota Mining Manufacturing.
Oh.
Yeah. So you learn how to do these things. So anyway, my team. So I brought 2 people over from BMO. One person has been with me 19 years.
Oh, so solid partnership. Love it.
Yeah, and he's my work wife. He's a fixed income person by background. I'm a crazy equity person. So we speak each other's unspoken language. And then my second person from BMO I brought over, she's my kind of chief bottoms-up person. She's an investment banker by trade. I mean, the investment bankers think completely different than analysts and completely different than fixed income people. My fourth person is more of a macro, a business strategist, portfolio analyst. He gives me the Gen Z point of view, which is great because I have no idea what he's talking about half the time. So it's fantastic. Again, I love it because all 4 of us are on a call, and I just love not being the smartest person, but I just love the arguing back and forth that we talk. We actively argue about companies. And again,
it's healthy.
It's very healthy. We put together a really, really great process and a discipline in how we look at things.
Good. Tyler, you got a
favorite stock now?
No such thing.
Or one over the last couple of years that you've owned that's been done well.
I love On. And it's not just, I'm starting to get a little bit worried about it because when everybody's wearing something, I start to get a little worried. And I live in Naples, Florida, and even the old guys are all wearing On now. So I'm like, oh my gosh, I got to think about this. But I think what they've done on a technology perspective in terms of their product is by far superior relative to some others, number one. Number two, nobody knows about their apparel. Their apparel is amazing. So if people are buying aloe, I don't get it. It's just I don't get it. That's why we bought more Lulu in our value portfolio. I'm early, but
let's hope not too early. I travel in the same name. It's been a little painful.
It's been very painful, but so you think about a great brand like that, and then you get Chip Wilson coming back.
You would think.
Founder. It's just like Bob Iger when Bob Iger came back to Disney. Anyway, so
we're off track.
But we're off track. But On, right? I think that's an amazing name that not enough people own and think about.
I do own it in my personal account.
Oh, look at that.
There you go.
Full disclosure.
We've owned it for, I think I bought it before COVID. So 2019 or so. We were early because we were looking for, here's why. In consumer discretionary, it's a really, really hard sector. And in small mid-cap, you got restaurants. It's a crappy business. I was a bartender by trade in college. I mean,
was it the red carpet? Where were we at?
I can neither confirm nor deny any rumors regarding bartending or being at the red carpet, nor will I comment at this time. But what I will say is, restaurant business is a tough business, right? And you got to be on the themes. So I'm talking about tough business, right? So I own Shake Shack. I own Shake Shack more for the theme that Shake Shack is, right? But anyway, so you're looking at consumer discretionary, and we own Raw Stores, which is more defensive, but it's a great company in consumer discretionary. But On to us was just a category killer type product, and so we really like that.
Love it.
One last stock. I mean, I know that you've owned it for a long time. It graduated out. You want to talk about Spotify? I mean, if you do a job great like you did in this name, that's why I love hearing the story about it.
Oh, I just, listen, sometimes you just get lucky. No, I'm not lucky. So those people know me. I was at Piper Jaffray for a long time. And at first, I didn't like Apple, man. I didn't like Apple.
Oh.
Gene Munster, my buddy,
Ah.
he sat three doors down, not the rock band, but 3 doors down from me at Piper. He's like, Belski, you don't get it. And I'm like, listen, Gene, I got a music match from Dell. It's a great product. 15,000 songs. It's about 20 pounds, but I love it. Then he goes, Belski, you don't get it. It's about the operating system. Finally, I got it. And I've owned Apple in portfolios for myself and for clients since 2004 or 5.
Wow.
Anyway, so I never thought I would see a company or experience a company that is better at Apple at something, that they're in the same type of business. And it was Spotify.
Yeah.
And it was Spotify from the music side of things. And you know what got me on the Spotify thing? On Spotify, there's a setting that you can merge the songs together. And Apple just added it this year, by the way.
Yeah.
Anyway, Apple Music
I
anyway.
haven't figured that one out yet.
Yeah,
I'm
so you
still
can
an Apple
merge the
guy.
songs like a DJ. There's no air in between.
I'll show you how after.
And so they have better they have better versions of songs than Apple. And so I bought it whenever this guy here may or may not be in the room looking at me, been bugging at me to get in the small mid cap. 7 or 8 years ago when it came out of the portfolio, maybe 8 or 9. Anyway, and so $7 billion about that company. Now it's like $70 or $80 million.
It's crazy. What's a
crazy.
fun story? Well, Brian, thanks for coming. I mean, I can't wait for this partnership. It's kicked off. It's live. So reach out to your advisors. Gradient SMID Cap portfolio. We have the man in studio. We have access to you if we have any questions on any of the portfolios.
Is this I'm going to come back here. Am I going to be invited back?
Oh,
I mean,
100%. Anytime you want to stop in Minneapolis,
I
for
would
a
love
quick
to.
show,
That would be fantastic.
We do this once a week, and the door's always open. So if you want,
Are we going to do
we
the
can talk
truth?
anything.
How about the two truths and a lie? How about 2 lies and a truth?
How about you bring the question next time?
I'm pretty sure, didn't you try that?
Yeah, has
one week
anybody
and
ever done that to you?
And
Yes,
It's
we
screwed-
rotate
We
every
rotate.
week.
Oh,
So we
okay.
do.
it screwed us up.
Yeah,
so we
I did
just
too.
stuck with the 2
Yeah,
truths and a lie.
yeah.
We couldn't figure out which one we were choosing. If it was
Our minds were not prepared for that, but I'm trying once it's my turn, which, we rotate. Once it's my turn, I'm trying to be as
You're
evil
already
as
thinking right
possible,
now,
but
aren't
you
you? She is
outsmarted
evil.
me this time.
The wheels are spinning. So, all right,
Thank
Brian,
you so much.
Thanks for having
Appreciate
us.
it.
Like and subscribe, everyone. Great guests we had today.